Hey guys, this is Rudy for Bester Investor, or as some of you know me by now, Mr. Oxy. Uh, it is almost Friday, December the 11th, and we're going to talk a little bit about Oxy, where it's going. I'm going to revisit the YouTube poll that I posted as a little challenge last week that asked you where you think Occidental was going when last week it was kind of hovering around $18 per share. I suggested on my channel that I'm desperately seeking for some undervalued stock, and Wesley Wong mentioned to me that maybe people won't be calling me Mr. Oxy anymore. So I said, how about Mr. Stocky? And Wesley said, no, we can call you Mr. Undervalued. So that maybe that's going to become my new name. I'm not sure yet. Anyway, we're going to take a look at that poll. We're going to look at why Occidental is up 54.5% since reporting Q3 earnings. We're going to talk a little bit about the tender offer as was disclosed in their 8K filing this past week. We are going to touch on what's happening in the United Arab Emirates, which was kindly shared with me by Yeti Zhang. And then I'm going to ask you to subscribe and wrap up the video. So here we go. This is what you came for. All right, guys. So let's kick it off with my daily email. So every day I get an email like this from Occidental. You can sign up for it too if you'd like. You can just go into the website and say I want the daily stock price, and they'll send you an update every day. So even when I'm traveling or I'm not connected, I have the ability to see at the end of the day what happened with Oxy. And what we could see is today the last trade was at $21.31, and that is a change of $1.92. And we can also see that Oxy managed to gain 9.9% today, which is quite a chunk in terms of a one-day gain. The day's high was 21.61 and the day's low was $19.30. So a pretty good day for Occidental that closed the day at 21.31. By the way, just after hours, it was up even a little more. So let's go back about a week. A week ago, I posted on my YouTube channel, and I posted the little challenge, and I said, all right, guys, tell me what you think is going to happen to Oxy by the end of next week, which is tomorrow. At that point in time, Oxy was trading at about $18, and I said, what is going to happen from this point forward? Are we going to go down? Let, for instance, say $16 or down from there? Are we going to be flat, $18 or thereabouts, or are we going to be at $20 or more? Many of you are really, really confident because most of you said $20 or more. So we had a total of 124 votes on that. So that's quite significant. And the majority of you were correct because you said Oxy was going to be $20 or above. And that's actually where we ended up for the week. So well done, us. What I do want to spend a little time on is not just view the world through rose-colored lenses, as it were. And I chose this particular report. This is from Zacks Equity Research, because I wanted to sort of visit this a little bit and say, let's see what other people are saying, why Occidental is up 54.5% since last earnings. And the last earnings, obviously, as you know, was just a short while ago because it was just a month back. So Zacks writes, it has been about a month since the last earnings report for Occidental Petroleum, and shares have added about 54.5% in that time frame, outperforming, which is an understatement, significantly outperforming the S&P 500. Occidental Petroleum reported third quarter 2020 loss of 84 cents per share, wider than the Zacks consensus estimate of a loss of 70 cents. In other words, Oxy did worse than was expected. Total revenues came in at 3.23283 million, so 3.2 billion, which also lagged the Zacks consensus estimate of 4.2 billion by 23%. So you could argue that that is quite a significant underperformance. Oil and gas revenues for the quarter were 2.9, almost 3 billion, which is down 25% year over year. Chemical revenues for the quarter were 937 million, which was down 12.5% year over year. And midstream and marketing revenues for the quarter were 364 million, down 68.7% year over year. So at a glance, you can see the Zacks report is basically all bad news. So if you scroll a little bit down into this report, then it says, for the quarter under review, total sales volume was 1.228 million barrels of oil equivalent per day, which was up 10.2% from the 1.114 million barrels oil equivalent per day recorded a year ago during the same period of quarter three. Then they add, Occidental, similar to other oil and gas companies, was adversely impacted by a steep decline in oil prices. Crude oil hedges provided some support to the company amid falling commodity prices. So the first uptick we can see over here is that the sales volume was actually up 10%. And that is quite significant because there is a large difference between the extra difference, or the delta between 1.2 million and 1.1 million, so 100,000 barrels per day. It's quite a chunk of revenue, especially when oil kind of hit the high 30s as it did during the third quarter. And of course, as Zach says, they had a couple of hedges in place in order to provide some support during the falling commodity prices. However, this is where the good news starts. Oxy is aggressively managing costs and implementing ways to lower expenditure. Courtesy of cost management and strong production, domestic operating expenses for the third quarter were $5.38 per barrel of oil, compared with $8.45 registered in the year ago quarter. When you have that large a difference in terms of cost savings at the level of production that Oxy is generating on a daily basis, it is an enormous chunk of change. And that's one of the reasons why, or perhaps the primary reason why, Oxy has rallied. The company exceeded the $2 billion non-core asset divestiture target for 2020, which will assist it to lower debt. Occidental has reduced outstanding debt by $1.3 billion year to date. Of course, that is good news too. Interest expenses for the reported quarter were $353 million, compared with $363 million a year ago in the same period. The decline was due to a reduction of outstanding debts of the company. As of September 30th, Oxy had long-term debt, net of current portion, of $35.9 billion, compared with $47.5 billion on December 31st, 2019. That difference is almost $12 billion in terms of total debt reduction. Third quarter 2020, Occidental's total capital expenditure was $246 million, compared with $1.7 billion invested a year ago during the same period. So I guess Zach's asked the question, which was a fair question to ask, but then they very successfully succeeded in answering the question quite eloquently, and yet still arrive at a conclusion which is probably at least somewhat puzzling. And that's one of the reasons why I always say analyst, schmanalyst. Outlook estimates have been broadly trending downward for the stock, and the magnitude of these revisions indicates a downward shift. It is no surprise that Occidental has a Zacks rank of sell. We expect a below average return for the stock in the next few months. Well, good luck with that, Zacks. You have already been proven wrong. How about the Oxy tender offer? Of course, this just happened this week, and that was December the 7th, and the very next day, December the 8th, Occidental announced an upside of the previously announced cash tender offers and consent solicitations for certain of its senior notes. Occidental is increasing the maximum aggregate purchase price of notes it will accept for purchase, excluding accrued but unpaid interest as amended herein, the maximum aggregate purchase price from the previously announced amount of $1.5 billion to $2 billion. This is going to knock a huge dent in Occidental's debt burden, or the wall of debt, as Wall Street likes to call it. It seems as if Wall Street likes the any relationship with the word wall, and that's why they call Occidental's debt a wall of debt, as if it's somehow insurmountable. Just for your interest, these tender offers expire at midnight, New York City time, on January the 5th, 2021. What else has been happening? Well, Zidi Yang shared with me this report, which was published just yesterday on December the 9th. So this is fresh off the press and brand new. It says the United Arab Emirates taps Occidental to boost oil capacity as OPEC cuts rankle. The United Arab Emirates and OPEC are not necessarily very friendly right now in terms of the cuts that OPEC is trying to achieve. The United Arab Emirates awarded oil exploration rights to Occidental Petroleum, moving quickly to expand output capacity just a week after the country clashed with OPEC's partners over production limits. Government-owned Abu Dhabi National Oil Company picked Occidental to explore for oil and natural gas at a block in the desert along the UAE's border with Oman. Of course, we know that Occidental is very active in that area anyway, especially in Oman. The block is adjacent to an exploration area that ADNOC awarded to Occidental last year. Occidental will invest as much as $140 million in the new area. Abu Dhabi is the United Arab Emirates' capital and largest emirate, and its fields produced almost all of the country's oil. The Supreme Petroleum Council, which sets Abu Dhabi's energy policy, last month approved a $122 billion budget to help ADNOC boost production capacity by a fourth to 5 million barrels per day by 2030. The target highlights the United Arab Emirates' unhappiness with output limits imposed by the Organization of Petroleum Exporting Countries, that's OPEC, and allied producers like Russia, as that cartel tries to prop up oil markets. The so-called OPEC Plus alliance has capped the UAE's output at roughly 2.6 million barrels per day until the end of the year. Well, it was good news for Oxy from the point of view that when OPEC caps the production and output, then obviously that benefits Oxy anyway. And in this particular instance, it's a double whammy for Oxy because it benefits both sides of the equation. So a win is a win, and this looks like a win-win. I'm going to wrap it up with this slide over here, which I'm sure all of you are familiar with, but this is Occidental Petroleum Corporation's performance as of the end of today. We can see that the S&P 500 was down, the Dow as an index was down as well, just a tad, but anyway, it's still hovering around 30,000, which is quite amazing, and then the NASDAQ was up a little bit today. But Oxy was the giant slayer today, finishing up nearly 10%, and in fact, it went up a little bit more after market. The last time I looked this evening, it was actually up 11.5%. So guys, on that note, I'm going to wrap it up. This is Mr. Oxy saying goodbye. Thank you for watching. Don't forget to click the subscribe button if you're not a subscriber yet, and tune in next time for more content similar to this particular video here. Thank you for watching. Stay safe, take care, and we'll see you soon. Bye-bye.